Hi, this is Scott Murray, and welcome to the Daily Economic Market Shout for Friday, Bastille Day, July 14th, 2023. It's great having you with me here today. And today we're going to talk about two positive developments. One out of the consumer sentiment number coming in a significant gain. We're moving back to levels that we haven't seen for a year. We also saw both the expected and the current conditions moving up in parallel. That's a healthy sign. So what are people saying? Yes, 2.5% growth for people's balance sheets, financial conditions over the next year. That's for the middle and the upper class group. The middle group is not as helpful, but they do expect some type of rise. So that's at least some good news there. People, 35% of Americans still think that inflation is the number one issue. Clearly, that'll be something we will see out of the election cycle that's coming is, the desire to, tame inflation. And we've seen some better signs along that area because, honestly, expectations move the other way. 3.4% of consumers, a little bit higher than what we've seen recently, particularly with the low print we got. That's probably a little more problematic. In addition, on the purchase side of the equation, we just don't see the enthusiasm for durable goods purchases. It seems like the consumer is sort of worn out. So that probably will hold back consumption as we move forward this year. So yeah, a little bit better, a little bit more enthusiasm for income, jobs clearly being an important element, and that seems very stable right now. And I think that's a healthy sign for that. And no doubt the market is seeing those elements that we're working through. And in a sense, good to see JP Morgan, number one bank in the country, having very strong earnings, hitting on all cylinders. It's a bank usually do well when there's spread. We have spread now. The Fed has encouraged that, so we have higher interest rates. Plus, we have banks able to able to earn. You get 1% 10-year, really problematic for banks. Here, we've clearly seen a better environment. Banks will facilitate capital. Capital will be invested. That's a good sign. Now, actually, for spending, we see another good sign in terms of the government spending. Maybe not a good sign for the government, but good sign for the consumer, meaning there's stimulus out into the economy. We're seeing up around 900 billion. This is compared to earlier, the previous financial year. Do note we're 9 months into the fiscal year, so we're starting to see a good interplay. Revenues down. Yeah, this is telling you that the income capital gains are not there. We're moving back. We'll probably see a little bit of a boost there. Social Security, Medicare payments up around 12% into the system. Contrast that to corporate income, just about flat. So yeah, down 400 billion in terms of revenues year over year, spending up 500 billion. Not a good combination. Coming in at 227 for the month of June. Expectations were about 205, and converse that to 88 billion last year. So the spending machine is in full motion. 150 of that 500 increase is, interest income interest payments. So clearly the higher rates have had that. And actually that's sort of a help to the economy, meaning the consumers are getting better interest rates, and that's moving that element higher. However, Medicare and Social Security are up. Yeah, Social Security is up about 10.6%. So it's a little bit lower than the gains, but we did see a whopping increase in Medicare payments, and medical inflation may move with that. So we want to keep our eyes on as we move forward further. When we think about other areas like education, social services, plus veterans, those are also moving higher. So, we've seen 2% growth, maybe a little bit higher year over year as we move into having deficits of this size is quite problematic, particularly if you want to control inflation. It's good for inflation, but I think the plan was to do the other. And as we said, 35% of Americans think inflation is too high. So we have to, understand that the car is being pushed negatively by the Fed, but clearly the accelerator on the financial side. So yeah, good news for the consumer, good news for the markets, particularly the equity markets, spending for the government, and better confidence for the consumer. This is Scott Murray for the Daily Economic Market Shout. Thanks for joining me.